As expected, the European currency rose against the US dollar as a $54 billion lifeline provided by Switzerland's central bank to Credit Suisse hosed down market fears about an imminent banking collapse. Thus, traders shifted their focus to the meeting of the European Central Bank. The vast majority of market participants expected the regulator to raise interest rates only by a quarter of percentage point or leave them unchanged. However, the Governing Council decided to increase rates by 50 basis points, sticking with its fight against inflation. As a result, the euro edged higher, recovering some ground after heavy losses posted on March 15th. ECB President Christine Lagarde said the rate decision was adopted by a very large majority of its policymakers. She rejected suggestion that its campaign to tame inflation is a threat to financial stability, arguing that European banks are quite resilient. The head of the central bank also added that the banking sector is currently in a much stronger position than where it was back in 2008. Further rate moves will depend on statistics on inflation and the labor market, she added. Against this background, both the euro and the British pound gained value. The latter even returned to its one-month high. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on inflation in the euro area. On a monthly basis, consumer prices are forecast to jump by 0.8% in February, contrasting January's 0.2% dip. Euro area annual inflation is expected to remain unchanged at 8.5% in February 2023. Core inflation is anticipated to rise by 5.6% from 5.3% a month earlier. In this case, the ECB will get the go-ahead for further aggressive policy tightening path, thus driving the euro up. In addition, traders will receive data on wages for the fourth quarter in the euro area. However, this indicator will hardly have a severe impact on market sentiment. The United States is set to release data on industrial production. The indicator is projected to increase by 0.2% in February. Furthermore, traders may take notice of the University of Michigan's surveys of consumer sentiment and consumer expectations. Against this background, one can count on a continued rise in the euro, of course, provided that data on inflation in the euro area signals the possibility of further interest rate hikes. And now let's move on to technical analysis. According to the 1-hour euro-American dollar chart, the levels of 1.0632 and 1.0664 act as intermediate support and resistance respectively, so it is worth focusing on them. A further rise followed by a false breakout at 1.0664 will make it possible to sell the pair in a view to an intraday correction of 25-30 pips towards 1.0632. If the price fixes below this mark and tests it from the bottom up amid strong statistics from the US, renewed demand for the greenback will bring the euro down to 1.0595. At this level, I recommend going long in the event of a false breakout. Long positions on a rebound can be considered at the new support level of 1.0554. If bulls take control of 1.0632, a false breakout at this mark will create a strong buy signal. In this case, the European currency will most likely rise above 1.0664. Its top-down test will lead to a further increase in the volume of long positions. Thus, the euro will surge to 1.0692 and 1.0723. At these levels, it would be a wise decision to go short on a rebound, counting on an intraday correction of 25-30 pips. Meanwhile, the British pound seems to be heading for 1.2169. A false breakout at this level will allow traders to sell the pound-dollar pair. Short positions on a rebound will be relevant after the price hits a new one-month high at around 1.2217. In this case, one can earn on an intraday correction of 30-35 pips. Today's calendar is bereft of any important releases from the UK, so traders will be guided by US statistics. If the pound sterling falls, bulls will need to protect the level of 1.2124. A false breakout at this level will create a buy signal. Sell signals will be generated in case the price forms a false breakout at 1.2169 or fixes below 1.2124 and tests it from the bottom up. Strong US macroeconomic indicators may result in a nosedive to 1.2079 and probably 1.2028. At the level of 1.2028, traders are recommended to go long on a rebound, counting on an intraday correction of 30-35 pips. Short positions at 1.2079 can be opened only amid a false breakout. Good luck and have a nice weekend.